Mr. Mark Selby, how are you, sir?
Very good, Mr. Matthew Gordon.
Okay, but you've just jumped on yet another aeroplane. You've been in Europe, have you not?
I have. I was in Lisbon yesterday attending the International Nickel Study Group meetings where I was asked to present Crawford and the Timmins Nickel District. So was excellent, very well received. So it's a good, well-informed audience to be able to make that kind of presentation. So,
oh, for sure. I mean, what sort of people were in attendance?
Yeah, so basically, this is a statistical gathering body for all things nickel. But obviously, you've got key analysts and big, people from each of the key Western producers there, to really sort of have make sure that they're coming up with a view that makes sense for everybody. So, it's generally pretty good group of people in terms of the Western nickel market.
Well, and also in attendance, U.S. government in the form of DOD, is that right?
Yeah, so which was great. I went to the Treasury Department back a few months ago, and so it was good to be able to interact again with one of the key people in the government who's responsible for looking at all things nickel as they roll out their critical mineral strategy. So.
And what do you think they got away from? Got out of it, right? I mean, because obviously they're starting to pay attention. We're seeing them turning up at uranium sessions, copper sessions, nickel sessions. Like, what is it that they're trying to understand? And what did you think they walked away from yesterday's meeting thinking?
Yeah, I think they're just trying to get at sort of a better view in terms of where the supply demand sort of overall for the market is, and then obviously. They do have key projects come in and present, once in a while. So just sort of making sure that they're in the flow of all things nickel. And again, their key mandate here, right, is about building, nickel supply chains, that don't involve China and have more of them occurring in friendly countries. So, that's sort of that they're out there, making that point, making those connections, and so on and so forth. So,
right, and just in terms of, because I do want to get on to nickel price and obviously some big news from you in a second, but just sticking with this INSG meeting for a few more moments is, again, DOD will be looking at this and going, I'm trying to work out where the supply is coming from, what exists at the moment, what it's going to do in terms of future demand, and how do I make sure I'm front of the queue for that? I'm sure. So in terms of the sorts of numbers that were being talked about, sort of like who's supplying, where it's going, etc. And again, anything you can tell us on that side of things?
Yeah. So the good news is on the demand side. They're looking at 8 to 9% demand growth. Again for the coming year, and so. Literally, when you look at the average growth so far this decade, we're about almost 9 to 10%, for the first 3 years of this decade. Again, I've said many times on the show, the analysts are underestimating demand. I can tell you most analysts don't have anywhere near that number. And remember, we're just getting going in terms of EV sales in places like the U.S. that will use lots of big nickel batteries. So, the key thing is if you start rolling out 9 or 10% out 6 or 7 years, my 5 million ton plus forecast ends up being something that looks like a 6 million ton plus forecast. So, so that was good. The supply, obviously, we've got lots of supply coming through. The challenging part is, the INSG has had numbers like this, for the last year and a bit now, showing, quite significant surpluses. But, there are a lot of participants at the meeting. We're kind of challenging the numbers to say, okay, if we're in surplus, where is this surplus sitting? Because, you don't see premiums, and prices for class 1 products, going down, right? Which you would think if there's an excess of supply, nickel pig iron in China and Indonesia, it would be sort of the most likely culprit. And yet, for the last 3 weeks now, we've been talking about, ore prices going higher, NPI prices going higher. So again, that doesn't sort of jive with the surplus sitting around. So we are in surplus, no doubt about it, but I don't think it's anywhere in that large. And again, I think what it is when you add new capacity, you need to fill that supply chain with feed to fill that consumption, and you also have to fill the downstream product there. And because the battery cycle is pretty complicated relative to a stainless steel mill, you've got to for each gigawatt of battery power, you also have to have cathode production in a separate plant, and then you also have to have precursor production in a third plant, all of which are basically producing for the first time. So I wouldn't be surprised to find out that there's a good 150,000 tons of new in-process inventory that's basically going to be there forever, for the most part. But people aren't counting it as consumption. So we'll see how the year goes on. But again, and getting from the market participants that things are in surplus, but it's not. No one was bemoaning the current market.
So, let's very quickly make sure we sort of, because you're giving us some clues there. And with regards to pricing, we talked last time out about we're going to see a little bit of downward pressure. It's broke through 20,000. Where are we at now? And do you still kind of hold your view that it pops back up, end of the year, beginning of next?
Yeah. So, again, generally, the longer the support line that you break, the more significant the reaction. And so no surprise here, we gapped down almost $1,500 a ton in a few trading sessions down to the 18,500 ton level. We've been kind of hanging in there for the last week. I think we will go down to the 17,500 ton per ton level, around $8 a pound. I think that's what we need to kind of basically sort of clear out. Let the bears do their dance, get the bulls on the sideline for a bit. And then, again, there's nothing I've seen that would suggest that, by year end, we should see EV demand start to reasserting itself, strength in the stainless supply chain come through. And again, we're coming off a year where we have a war in Ukraine, interest rates go up 5x. Most of the global economy is in session. China is blowing up, and nickel demand is still up 9% this year. So, if you think some of those, variables are going to flip, into 2024, then you could maybe see, do we see 12%, 15% growth next year? Let's see it. And again, I think that sets the stage for prices moving higher earlier, and then at the end of this year, early in the new year.
Right. Okay. So as far as concerned, this kind of great convergence is still in line. Yeah.
Yeah, 100%. With this sell off in LME prices and in the corresponding prices in China, was good. We actually saw sulfate prices, nickel sulfate, tick up a little bit. So you saw the discount squeeze even further on that point. We're almost back to where we were before this gap opened up. NPI discounts as well narrowed. They're still a little bit wide, but they're a fraction of what they were a while back. And as I said, in the next 6 to 12 months, those should all normalize to what they historically should be. So we won't see much this week. This first week of October is one of the big holiday weeks in China, and so things will be quiet for the next week and a half or so.
Right. Okay. Well, a bit of company news. Let's start with you. Big news from you. Go on then.
Yeah, so after I stopped in to see you last week, at the end of the week there, we put out our feasibility study conference call. So it'll be out October 12th. Very, very much looking forward to it. And we talked last week about all the good things that should be in there. The other piece that we talked about was the successful completion of our carbon storage IPT carbonation pilot plant that worked quite well, confirmed all the parameters that we want to use in the feasibility study. So we will be able to embed it in the feasibility study. And again, and then the other piece of it is we'd work with one of the big global consulting firms, who came up with a $25 per ton carbon price. So when you have, more than 1 million tons of carbon storage a year, you multiply it by 25, that's a nice incremental, revenue flow on top, which adds to the NPV of the project. And again, most importantly, for the overall NPV is this carbon storage refundable tax credit that the Canadian government has. So we still have to apply for it, so it won't be part of our base case, but we will clearly have it there and clearly show what the NPV benefit is. So again, it's significant, and we're kudos again to the guys on my team, who've pulled this together in just 14 months from first figuring this out. So
nice. So fully loaded, ready to go. I look forward to that. I'll be definitely listening into that one. I suspect a lot of people will be too. And you'll come back on and tell us all about it when it comes out, okay?
We must.
Bit of company news. Okay. A company that we've not really, we spoke about them a bit back in 2019, early 2020, asking a few questions around price, around their capex estimates. Now they've had a bit of an unfortunate few days, and that's Horizonte Minerals. What do you know? What can you tell us?
Yeah, it's tough. I mean, they were ticking along pretty nicely there. I mean, they had one bump up in capital costs, I guess, about a year and a bit ago. But that's, again, we've seen inflation. So, that stuff does happen. But, since that time, and as late as the beginning of August, they basically said, look, we're on time, on budget. And they were about 65% complete. So, normally if you're going to have a blowout, you would have seen, cost increases, you would have seen that show up, a little bit earlier. And so, they basically put out a release to say, oh, we're not starting first quarter. We've pushed it out 6 months. So, again, when you're 6 months from the finish line and you push it out another 6 months, that makes people nervous. And capital costs might be going up by 30% versus what we previously, had estimated. So, it's got whacked hard. Again, for people, who are looking, I think maybe it's been a little overdone. It'll be a solid project when it gets up and going. It's one of the only new sources of supply. It's in a safe country, and it should be relatively low carbon for ferronickel because it's hydroelectric power in that region. So in the long run, it'll be a good source of nickel going forward. But they gave some indications around water and so forth. So again, these are these things investors don't pay much attention to, but if you actually operate and build a project, water management is a key issue. They just hired their ops director in August. I don't know if he went in there and said, oh, not sure, I'm going to be able to operate this the way it's been constructed or something like that. Because that's, the only big change. And I'm just speculating here. I have no specific information, but they've talked about having to redo some civils and so on and so forth. So it sounds like they, maybe, had a water management issue that they have to address, before they start up, something along those lines. So again, hopefully they get it all corrected. They've got Orion and Glencore as two cornerstone shareholders. We'll see what happens in terms of the financing terms. Hopefully they don't have to raise too much equity, on a post this kind of thump. But we'll see how they come out. So I guess, if you're willing to take some risk, step in. It's down, it's down almost 80% from where it was a week ago. Or you might wait to see what the financing terms look like and then jump in off the back of the financing terms if you're a little risk averse at this point in time.
Yeah, I think it's a tough one for them because obviously they have been moving through the phases, and it's a case of because the market has hit them hard, 60% yesterday. I think it's down again in terms of the last week, and it's down again today. They're going to need to say or do something to get that faith back, as it were. It feels like one of those Oscar Wilde quotes. One increase in capex is misfortune, but a second one looks like carelessness. So we wish them well with dealing with that over the next few weeks and months. I'm sure they'll be the first to let us know when they've solved things or got things back in line. So maybe a buying opportunity if they say the right things. Let's see what happens. Let's get on to Glencore. Crikey Moses, we've talked about this in the past in terms of value destruction. This is a great case study, but I'm not quite sure what for. What can you tell us?
Yeah. So again, this is what Horizonte won't be. Horizonte is using proven technology in a mining, in a good mining jurisdiction. The Glencore and Koniambo are a great example of new process technology in a very challenging political jurisdiction. So Glencore basically started building Koniambo back in the late 2000s. It's never come close to its design capacity. Instead of using the same technology that the Chinese now have built 100 RK EF lines in each of Indonesia and China, they decided to, basically take some pieces that had been operated and put them together. And it hasn't worked out so well. And New Caledonia is a very tough place to do business. So, they probably put in $10 billion, and they've now said, look, if we can't renegotiate some stuff here, we're not providing any more funding to this operation in starting in February. So again, I don't think there is much that's going to change too much. Right now it's only a 50-50 joint venture with the northern government, but they're writing 100% of the cash. So we'll see what happens on that front. This is also a really good good thing, and he's sort of reinforcing a couple of key themes that we've talked about. This is the highest grade laterite deposit in the world. The best grade, by a good 10-15% better than any other deposit that's been developed in the last 30 years. Grade is just one variable, right? So, beautiful deposit, and it's been an absolute financial disaster. The other piece is, political jurisdiction, being in an established mining region with people who know how to work at a mine, suppliers who know how to supply a mine, contractors who know how to build a mine, being in an area where you have all of those in abundance versus a place where, there's almost no major industrial activity at all. And you basically have to build an entire ecosystem to go along with your project. That's the kind of challenge they face in locations like this. And, unfortunately it's been between Goro and Koniambo, it's almost like $20 billion of value destruction in the mining space.
Wow. 20 billion between Goro and Koniambo.
Yeah.
Well
done.
If you
think of if that had been plowed back into their Canadian operations in Sudbury or in, it would be a markedly different story. So again, when these things happen, it's good to make sure we learn from them. So, and try not to.
But you make an interesting point, and I don't want to get buried in all that kind of good stuff that you said, which is great. This is the highest grade nickel project in the world by some distance. Yet it can't make money. It actually, we're talking about between two projects, a loss of $20 billion so far. That's a lot of catching up to do if they can get it right. So grade is just one variable. Jurisdiction we're looking at, the technically you can't have something which works. The flow sheet's got to be right, and it's got to be built right, and it's got to continue to be right. So there's so many things which affect a company's ability to make money and make margins. So we'll keep banging that drum, and maybe one day people will get it. Right. The last company we're going to talk about today is Atlas Materials. Now, they've raised a bit of money recently, haven't they?
Yeah. So it's good to see private equity money come into the space. So, they raised $27 million on a $115 million valuation for a saprolite hydromet process that's unproven. And so great to see that kind of value. Again, you've seen, some of the initial car company investments have been on hydromet projects. I don't know if they have special flutes that you play when you do it that somehow entrance investors with that. I prefer proven pyrometallurgical processes that work. So anyways, good to see. One of the things that I find difficult is, there are two founding premises as to why this is such a game changer in terms of nickel processes. Is one, they basically say that, before this process, saprolite ore, which is approximately 1/3 of the world's current nickel resources, was not economically viable for battery grade applications. Again, this is this class 1 versus class 2 nonsense, ignoring the fact that all the saprolite ore is used to make matte, which is used to make very nice, good nickel for use in batteries. So, okay, no need on that front. And then this is the other thing hydromet guys are always big on, is that, they claim, that they can make nickel with almost, zero CO2, no waste or other emissions. All existing processes to refine nickel are costly and harmful to the environment due to their process emissions and waste dumps. again, pyrometallurgically processing laterite ore. Slag can be made, inert. It's used generally to help build the roads on the mine site. So it's actually not disposed of at all. There's it's used for something else. So your solid waste is zero. Again, if you don't put the right pollution control things to manage the emissions from the stacks, then there are some various emissions there. But in today's world, you can capture the SO2, you can capture the CO2, and you can capture all the dust and the off gas. And so we're, close to all of the dust and the off gas. Meanwhile, they're talking about some sort of cementitious material. Again, these guys there's a bunch of basically, solid waste that comes out of this process, which has been chemically altered. The stuff in in some hydromet processes has to be stored underwater because it's reactive. They're going to come up with something, and hopefully they will, that is not reactive. But, again, the proof's in the pudding. Every hydromet disaster worked at a lab scale. The Koniambo process, that's a pyro process, but, that worked at a lab scale. And so, fingers crossed here to see what happens there. So
it's interesting. I think it's interesting actually, because they've obviously raised $27 million on a $115 million post money valuation, right? So that's good, but just under a third, right? So 30% ish, and it's got all the right buzzwords, hasn't it? You talk about, because people say it, it must be true. And I also, it makes me wonder, how much of this is diligence and understanding the process, and how much of it is ticking a few boxes in terms of the ESG component. And, I guess at the end of the day, it kind of doesn't matter. They got the money, but others who perhaps don't have this hydromet process, which as you say, with the right pollution control and environmental equipment, people could match them potentially, but they'll struggle because it doesn't have the kind of green credentials.
Yeah, and it's tough. It's great to see private equity money come into the space, and I want the private equity money to be very, very successful so that we get more private equity money because again, I think that is, private equity money does a lot of early stage oil and gas. And I think, to get out of this kind of, horrible funding, situation we've really been in for the last decade, we need to see private capital come in. So I would just like them to make investments in stuff that looks like, is going to have a much higher probability of return than some of the stuff that they've invested in so far. So again, maybe I'll be proven wrong, but we'll see what happens.
Okay. Well, exactly. We will see what happens. We do need new money. We do need private equity money. And quite frankly, the amount of CEOs, I think after 3 years of being beaten up and kicked around the field are saying to me, I don't think I'm going to do another public company. I'm going to go private. The money is there. Perhaps given the environment we're working into, this kind of new metal super cycle that we think is coming, maybe that's going to be a lot easier for companies. We shall see.
We'll see.
Mr. Mark Selby, I'll let you crack on because I know you are probably, thank you very much for getting up so early to talk to us after jumping off another aeroplane. But it kind of feels like good news. You're getting a lot of new ears and some pretty big companies, governments, interested bodies leaning into nickel at the moment. Exciting times.
Very exciting times. Take care, sir.